2009 marked the bottom of the global financial crisis, and a lot of people were swearing off the share market for life. It hardly seemed like the ideal time to launch a new funds management business, yet that's exactly what Steve Johnson did.
Once Steve started to explain the purpose of the fund and the philosophy of the fund, and stocks that were probably a little bit beyond me as a personal investor, I thought that'd be a great opportunity to seek maybe some superior returns through interesting stocks that I wouldn't have the knowledge or know-how to invest in myself.
Well, Steve founded the business with $150,000 of his own money and some backing from the shareholders of Intelligent Investor Publishing. With that, he was able to raise around $10 million for a value fund to begin investing on behalf of a few hundred clients. It wasn't much money by the lights of an industry that often talks in billions, but it was enough for him to begin to establish what would become a very impressive track record. His first employee was Kate Ferguson, a personal friend of both of ours and former general manager at Intelligent Investor Publishing.
So early on, I was looking after all the administration side of the transactions, so the settlements, making sure everything balanced, keeping track of all the portfolio numbers and figures. I have probably the biggest memory I have is Steve and I had one office and one desk in that office, and he sat on one side and I sat on the other side, and we spent our week playing Tootsies and trying not to be too embarrassed about it. So.
Despite some early successes with stocks like RHG and Prime Infrastructure, the fund's first year performance was inauspicious. While he was learning the ropes, Steve candidly admitted that he made a few mistakes. But the clients responded in the way that he'd hoped. They remained invested, and in some cases they put even more money into the value fund. They were backing him to learn from those experiences. A market setback almost 2 years into the fund's life saw both it and the broader market in negative territory in late 2011. And at that point, Steve wrote an unusual blog post to his clients. He promised them, if the returns don't improve over the next 3 years, I'll sack myself and wind it up. By this point, the business had taken on another analyst, Matt Ryan, who may have been questioning his career move from the security of a role with global engineering giant Worley Parsons. Well, Matt's legal training and his diligent nature served the fund well when it became mired in a tricky legal stoush with another shareholder in a key investment. The stock was Real Estate Capital Partners. It was a trust which held commercial properties in America and was subsequently besieged by an experienced and fairly hard-nosed corporate raider. And in response, well, Matt combed through literally every line in that trust constitution looking for a way to protect investors' interests. With the help of the Supreme Court of New South Wales, he found a way to extract our capital from that trust and liberated literally millions of dollars in value for our fund.
It's been a matter of being surprised by certain outcomes and I guess not relying on your model too much and always sort of questioning the assumptions you're making around evaluation. When you read books and you see great investing ideas and things that have played out well, you often, I don't think, see the uncertainty at the front end that everyone goes through as part of trying to shore up your decision and make sure it's the right one.
With Steve and Matt working closely together, the fund's performance started to improve dramatically. In the 2012 calendar year, investors enjoyed a 31.2% return. Then at that point, the business was contacted by a young man whose delightful Italian accent was matched only by his remarkable sartorial style. Alvise Pegion, a keen young analyst, offered to work for the business for free, a price that proved impossible to resist.
I learned a lot of things. At the moment, I'm a junior analyst, so I don't get to do full-time research. But I learn quite a lot just from listening to Steve, Matt, Kevin and Gareth, and also just reading their research and contributing in any way I can.
The timing of an Italian national joining the team also proved fortuitous for the business's next venture, which was an international fund. Alvise was instrumental in researching one of the fund's most successful early investments in a little company called B&C Speakers, which at the time the fund purchased it, reported its results only in Italian. The international fund proved popular with clients. They could see the potential for expanding the horizons of the kind of investing our team specialises in. And Gareth Brown, a senior analyst with Intelligent Investor Publishing, was eager to spread his wings into the funds management area. And the fact that he and his Austrian wife were living in Vienna only added to the alignment of stars. After he came on board, we found that having a European-based analyst who previously had worked closely with Steve at Intelligent Investor Publishing was a real plus for the funds management business.
Well, I get to do a job I love with a great group of people. But I think even more than that, our investors have entrusted us with a significant proportion of their life savings, and that sits quite heavily on my shoulders. So one of the things I'm most excited about is going through the next decade and more and not screwing that up.
The business also attracted Kevin Rose, an experienced analyst based in New York. Kevin had attained an MBA from Columbia Business School in New York, which was where Warren Buffett studied under Benjamin Graham way back in the early 1950s.
I joined the team for a number of reasons. First, I was really attracted to the small business nature of the firm. It had a collegial, family-like dynamic that was really important to me. I know that can sound like a cliche sometimes, but it's one I believe in, and I value my professional relationships very much. And then the second, and probably most important aspect of the opportunity, was the chance to work with Steve. I could tell from the beginning that we shared a complementary philosophy on value investing, which is very important in this business, and that there was a great deal of mutual respect there. So it was a unique opportunity to work on an international fund for a foreign manager located halfway around the world.
While Gareth and Kevin were scouring the globe for opportunities, Matt and Alvise continued to work successfully with Steve on the Australian-focused Value Fund, which delivered investors a spectacular 44.2% return for the 2013 calendar year. The International Fund's first year proved more successful than the Value Funds. It returned 35.8% for investors in that first 12 months. And that was particularly impressive because not only was it ahead of its benchmark, but it was ahead of its benchmark while it was carrying a lot of cash through the period. That's because Steve and Gareth and Kevin, with some help from Alvise, really took their time in constructing an attractive portfolio that combined both large, well-known blue-chip holdings with smaller hidden gems that they found all across the globe. In March 2014, Alex Rudge joined the team as business manager. She had a strong background in risk and finance, and we're really happy to bring her on board.
I'm the business manager for the company, so I'm responsible for settlements, investor communications, and anything else that happens on a day-to-day basis within the office. On a more long-term basis, I'm responsible for managing projects such as the office move, any roadshows, and any future investor events that might happen.
Well, I sincerely hope that the fund stays around for my entire investing outlook, which is 30 to 40 years. I hope that it continues to invest in distressed, interesting, value-oriented stocks where we can seek superior returns. And I hope that Steve and the team continue to do a great job that they've been doing along the way.
2014 marks 5 years of life for the business. It's now firmly established and growing, and the time's come to leave the Intelligent Investor nest following the sale of Intelligent Investor Publishing to listed company Australasian Wealth Investments. Looking towards this new chapter, it was clear that a new brand was required. We wanted something that illustrates the team's determination to search in unconventional places to find those undervalued opportunities. We wanted something that reflects a willingness to ignore the crowd and seek unpopular but rewarding investments. Now, while the name will be different, it'll be the same team that we've established over the past 5 years, led, of course, by Chief Investment Officer, the one, the only, Steve Johnson.